And good afternoon, everybody. Thank you for continuing to join us all today for our discussions on trading and psychology. A trader's mind can be a very useful tool, and it can be a very destructive tool. And so my portion today, I'm looking to focus on what we now call, or we and being a group that I'm within, we call it our S.E.T score. And what that stands for is sensations, emotions, and thoughts. And so just to give a little bit of history, that I listened to most of Doc Severinson's presentation today. And again, I'm going to join what others have already said. He is spot on a lot of the things that he has been discussing and things that traders need to deal with, and how can we deal with them. He gave some excellent suggestions and some very good tips on what we go through as traders and how do we develop that trading mind. So I'm going to begin with, we've all decided we're going to be a trader. And in my case, the type of trading that I do is day trading. So I'm kind of showing you my screen because I want to show a couple of things here. How quickly a market, this one in particular is the NASDAQ future, how quickly that market can move and how that's going to have an effect on your sensations, your emotions, and your thoughts. Now, again, these are the important three. And we set it up as kind of like a scoring system. So each morning before we come into trade, we go through the steps of going through our S.E.T score and developing what it is. So it was set up by a group in a mind muscles think tank, so to speak. And Rich Friesen's going to be on later this evening. And it's Rich that kind of got us all together. And Rich and I go back 40 years plus. We traded together on the Pacific Exchange. And when we all left the floor, Rich went off and got a degree in neuropsychology, and I continued to trade. But we've gotten back together and shared each other's knowledge on several subjects. And Rich, of course, has developed this whole concept of trading psychology. So we decided that how can we best employ what we learn and what we're going to do to help us each and every day as day traders. And then we came up with, well, let's take a look at what we're going through on each morning before we choose to jump into the market and trade. Because if we're aware of what our sensations and our emotions and our thoughts are, that's going to help us to determine, do I really want to trade today, or should I sit this out, or do I let this amount of time go by? Do I then reassess my score to see where I stand? So when we talk about sensations, what we're looking at is, say for example, you kind of got up and your back hurts, you've got a sore muscle, you woke up with a headache, whatever could be troubling you, or you're just not feeling well. That's a sensation, because your body's going to be telling you you've got pain in a particular area, your head hurts, I slept wrong. Whatever your situation is, it's going to have an effect on how you feel. And so we take a look at that, and we give ourselves that moment to try to relax and really take an inward look. And then after that, we determine what are our emotions. And we know that emotions are very, very powerful parts of us, because perhaps you had an argument with your spouse the night before, or had an argument with your spouse that morning, or a child, or a coworker, or whomever. Something kind of pushed you to a little bit of anger, a little bit of tension. That's going to have an effect on your thoughts. That's going to have an effect on how you think and how you react. So again, we come through that, we take an honest look at ourselves, and we try to determine where are we within all of this realm before we begin to trade. Because again, remember, mindset, we're looking to have we want to focus on what the market is doing. We want to focus on, do I need to be long? Do I need to be short? How long, et cetera, et cetera. So this is all part of the morning routine. Also in terms of how we set ourselves up besides looking at the market so we can determine, gee, we think it goes up or down today, these are the levels, et cetera, et cetera. And the last thing that we talk about and we score is thoughts. And I kind of expanded that and thought about thoughts about the market. Now, I have over 40 years of trading experience, so my thoughts about the market can run deep and going at both extremes. So I may see a move in the market and I might decide, you know, and my brain is saying, oh, that's foolish, or that's stupid, or why are they doing that? Or you might voice to yourself, I can't do that, I can't sell that, I can't, which are negatives. And just tying into what Dr. Severin said, a lot of times when you put yourself into that type of an arena or a mindset, you won't do things. So it's a matter of what words we say. That's our thoughts. What words do we use? What words do we say to pertain to the market, to pertain to us? And then we give each one of those sections a score. And the score goes from 0 to -5, 0 to +5. Now, if you're coming in somewhere within there like, oh, I'm +5 or I'm +15 because you, on each one of those levels, you scored yourself plus. Well, you're totally all set. You're going to be gangbusters today. But if you kind of start to come in a little bit negative, well, now you're giving yourself a clue as to whether or not you're truly going to see what you need to see, or other factors going on inside your head going to prevent you from being your best. Now, having said all that, now we're going to start to put it to work. And I'm just going to use this as trading. And let's say we've now seen this come down. We see this little bounce. We're going like, we're going to go back down. I'm going to sell it. Now I sold it, and you see how fast that goes through. If you've got a good connection, the market's now going up. And what I thought, well, hopefully, we're going to see where it goes, but say my goal in this trade is I want to make $10, 10 NASDAQ dollars, which puts that down here. So I'm going to put my bid in. Now I'm watching it go in the other direction. So what's going to happen here is this thing is now starting. What if they continue to rally it? What happens if it goes to 60? Oh, God. And you can see here how quickly your P&L is changing and how quickly something, now this is actually kind of a little bit slow, but I'm hoping that it's going to continue to pick up for us so that we can see how this all happens and how fast it happens and what you need to do. Oh my, now I'm down $200. Now I'm down $230. What do I do? I'm going to sell another one up here. See if they can get it. Oh, okay, they did. Now I'm short 2, and because I needed to improve my average, because I still feel the market's going to go down. Now I'm a little bit more relaxed. Okay, oh, well, now I don't know. Oh, now I'm down 270. And what's my limit? Where do I need to get out? How do I need to do this? Well, I better, well, if it gets above 300. So you kind of, now your brain's going, and so's the market. And the market isn't aware that you're short, and it really doesn't care. So it's our thoughts, it's our mind. And say I'm just like, okay, I've had it, I can't do it, I'm closing the trade. Well, I was up 900 something, now I'm only up 650, and here it's still going up. All right, I'll buy it. So now we're long the market, hoping to catch it, and it's like, hey, wait a minute, what are you doing? Oh, stupid market, blah, blah, blah. Well, we're not too nervous now. Okay, now I'm going to get a little bit worse. Oh, now I'm down $100 on the trade, and I just lost $300 on the previous trade. Come on, market. You're going to start to see how this can roll inside your head. What do I need to do now? What am I going to do? I don't know. Okay, I'll reverse the trade. Trade's reversed. Now I'm short again. And look, now this is all happening within a few minutes that we've sat here and we're talking. What do you think is happening inside your head? Damn, okay, I'm going to close that trade. Wow, now I'm only up 460. I was up 910 before. I've already given back $450, et cetera, et cetera. Well, now look, it's already gone up, and my indicators are telling me it should go down. I'm going to add another indicator, see if I can't give myself some help here. So I'm going to put in, let me go over this one. I'm going to put in a volume profile and see if that doesn't help me out, and see if I can't add some. Oops, I meant to do that a little bit different. Hold on one second. I need to run this again. Okay, so now I've got all these additional lines that are going to tell me, like this line right here, that's telling me that's a point of control. We got a line down here, that's the current low for the whole session, and we're sitting right in between. So what are the possibilities? Oh, the market might run up to here. The market could drop down to here. But now we're giving ourselves some calm. We have some moving averages in there. We're going to let the market do what the market needs without being emotional. So I've taken a step back. I've realized, okay, I need to rethink what I'm doing. I need to take a little bit of time to calm myself down because I want to go back to winning. And let's say that this was fresh for the day. Within the first 3 minutes of your trading, you're down $500. And you came in with the best intentions. But maybe you came in and you slept wrong, so you've got an achy shoulder, or you had an argument, so you're already a little bit edgy, or you don't want to be late for work, so you're trading in the morning, blah, blah, blah. Now you've got pressure. I'm down. I need to make that money back. All of these emotional things are going to really start to have an effect on you pulling the trigger. Conversely, say you've just taken a couple of hits in the market, now you're afraid to pull the trigger. Now you're going to start doubting yourself. Time to take another check on where are you sitting. Because sometimes, folks, the best decision that you're going to make is a decision where you don't trade. And you pull back and you just let the market be the market. Many times we put self-pressure on ourselves. We have to trade. We have to make money. We have to do this. And then we add additional things. That's pressure. Those are pressure statements. I have to. I borrowed the money to put in this account. I'm backlogged on paying my bills. I have to make money. Every time you sit down to trade, you've got to be able to be clear so that you are able to trade without outside pressure. A lot of people are watching futures markets. A lot of people are hearing that there's a myriad of folks out there that are selling their products, and they're telling you this is the golden ticket. And so people will run from one place to the other. But as Doc Severinsen said, and I'm sure others, and that I will echo back, knowledge, education, know what's going on, have an idea of what the mechanics of the market are. How do you get in? How do you get out? How quickly does it move? In a futures market and day trading, boy, you could be down real fast and you can be up just as fast. But you want to be more mechanical about it versus emotions. Emotions are dangerous when trading because you could be too euphoric. Wow, I just had this great trade. I just made $1,000 on one trade. Boom, I'm going to go do that again. And you drop 500. So presetting a lot of your strategy and presetting your goal and presetting, and I know what he said about goals, but I'm just talking about a trading goal, a daily trading goal. How much you're going to risk, how much you're going to want to make. These are preset things so that you're not necessarily jumping in and sabotaging your own trade. Well, no, I don't really want to get stopped out there. But maybe that was the best thing, because for someone to sit and say, well, I definitely know the market's going to go to this level. There is no definite in the market. Everything is purely random if you really think about it. We have tools that we use to help us give an idea of where a market may be going. We give an idea of what possibly could be happening. But if we're walking in and we're not going to pay attention to what our tools are telling us, but we're listening to what our emotions are telling us, I don't think that's a good combination for trading. I think that more or less than what we're going to end up doing, if you've just taken a big hit, you're going to end up falling into something such as revenge trading. And I'm going to just say that I would believe that several people within our group here today have revenge trade. I'll show you, you just made me lose $1,000. Well, here's another 5 lot. Next thing you know, it still goes in the same direction, and you're going in the wrong direction. You're counter trend trading, and now you've blown out your account. These things can happen very quickly. And a lot of it happens because of our own psychological profile and our own mental profile before we sat down to trade, before we went in to pull that trigger, the very first trade, and decide that's what I'm going to do. So before I enter a trade, I usually in my mind, some people preset them so the stops already show up. But in this particular market, you've just seen on my example on how quickly a market can go in either direction, and suddenly you're down. And I was only trading 1 and 2 lots. You're down some sizable money. And again, if you're trading with a big account, no problem. You're likely going to be able to handle a lot more risk. But risk management and knowing your risk management is going to help your psychological profile, your mental state when you go in to trade. Accepting certain givens is going to help your mental state, and it's also going to improve your trading. Because givens are that not every trade is going to be successful. Not every day is going to be a winning day, but you can learn and be relaxed about taking losses, about taking your gains, about making strategy changes, about looking at the market. Because I want to share with you, if you're the type of a trader, well, where you miss the trade, and I'm going to try again but often I just get filled. But I'm going to say, well, I see like I got filled because I took it down. But you saw, and this trade's what, 30 seconds old? And you can see it's up $200 already. Boom, I'll take that. Let's see if we can get out. Yeah, so we got out for 160. Now we're feeling a little bit euphoric. Okay, I'm going to try that again. Let me try and buy it again. They're not letting me in. Oh, but I am. Now I'm in. Okay, good. Let's do that again. Right now it's appearing that it might. Oh, what's it doing? Okay, we're okay. So we're going to let this develop. Think seriously on what would be going through your mind as you're waiting for this trade to come into fruition. You're looking for it to go up. You just made $160. In that same amount of time, we're now giving it back. And now we're giving back more. Uh-oh, I better get out. Close that trade. Oh, we're back to the same level. Well, that's okay. So now maybe I should be a seller. So I'm going to sell it. I'm doing this live so that these emotions that may be coming in could be real for us. Oh, wow, I was just down another 100. What, are you kidding me? What's going on? So you decide to get out of that trade. Now you're down a little bit more. You see how much the market did? It's right there. All right there. But we were in and out and in and out. First made 180, and then we gave back 240. All within 3 minutes or less. What is this going to do in your mind? Because you've already made a decision that you want to participate in the market. You've already made a decision that you're going to learn. You're going to go out and you're going to get a system. I saw that, Doc and others have offering their system. These are good things. If you feel strongly that it's going to really help you and you're going to learn something, then I would do it. Coaching. is something that you're going to learn. You're going to learn how to read the market. You're going to learn what these levels mean. Like all of these different lines, I'm telling you right off the bat that each one of them has a meaning, but let me put it up so that you also can see, right? The color for the point of control, the color for the whole profile, the color for a buy signal, for a sell signal, for high heat, which means, boy, it's really getting overextended or it's getting overbought. And then we come down and we have a point of control, which is sitting all the way up there. That's a high point of control. Where's our value area? Here to here. These are value. They are area high, developing area low. These are areas where traders will trade the most volume. We're sitting right smack dab in the middle, but we're also at a developing point of control. A developing point of control is where the market's just going to bounce around, but it trades pretty freely. So in other words, if you got 50, you're going to get 50 contracts. If you will get your size. There's a lot of volume that will trade in between here. Now, time of day has something to do with it. Now, I was talking about developing value area here to here, but that's the low. So here we have this developing value area right in here. And this is on a 300 tick chart. Let me close that. If I took this up, and let's say I just put it on a 5 minute, this is a 2 minute. Here's my 5 minute. I'm running the same things, same point of control, but boy, my range still stays the same. But now you can see how it makes sense. Look how much time, and this is Pacific time. So from 8 o'clock this morning till now, market's really traded in a pretty, 11,149 down to 10,913. Pretty decent range for day trading. But in terms of is it a major move? I don't know. I've seen bigger, I've seen smaller. But now, really for the last 2 hours, here we are, sitting right here. And that could tell you something. If you're saying, well, I think the market's going to end up here, it may, but what's the potential? Because these numbers are telling you something different. So do you see how mentally you can set yourself up? I'm going to buy it and I'm going to hold it. Meanwhile, we have no idea who's coming in and what they need to do. Because you've got hedge fund managers, you've got portfolio managers, you've got big traders who are just hedging. And now we're in the last hour, so maybe they've got something that they've got to do. How's that going to affect your mental attitude? What are you going to do? How are you going to put it together? When you get fearful, you're not going to react correctly. When you get over hyper, you're likely going to overtrade. These are emotions. Keeping a tab on your sensations, emotions, and thoughts throughout your trading day are valuable tools that are going to help you take a breath, take a moment to meditate, to bring yourself back into focus, and to stay focused. Because if you're working a trade, and I wish it was going a little bit, normally right in the close, it does go a little bit faster. So I was thinking, oh, this will be good. But say, for example, I do think it's going to go up. So I start buying. You going to let me in? Maybe not. But I'm watching it go up now. I'm like, okay. All right. I don't want to miss any more. Okay, I got in. So now I'm in at 14 because I made the decision. It's going up without me. I don't want to get in there anymore. So now I'm watching, forgetting that I'm leaving this here, although I shouldn't, because now I'm watching this trade. Oh, good, it's working. But the market can change on a dime, as we call it. So how much pressure or heat, as my one indicator dictates, how much heat do you want to take on the trade before it actually becomes profitable? How much profit do you want to take once it is? So this particular index, every tick is $5 because I only have one contract. If I fill that other contract, I'm working $10 a tick. There's 4 ticks to a $1 move in the NASDAQ. So right now I'm working it for $20 a tick, $20 a dollar. But now it's going down. Oh, now it's going down even more. How much? Okay, now I have 2 and they're continuing. But I don't think it should go very far. So if you have, let's just put it up there. For example, you decide that you're just going to run some fib numbers to say, let's just say from here to here. Now you're giving yourself, I know it's small, but you're trying to give yourself some opportunity to like, okay, where do I now think that it's not going to go up, it's going to go down? Well, technically you'd have to wait till here if you know anything about Fibonacci. So there are tools that we can get, but if you're not using any of those tools, you're watching your count drop pretty dramatically here. Where do you want to pull the plug? Are you getting nervous? Do you have butterflies? Are you getting that shooting of electricity that goes through your stomach and up and down your spine? You're now down $1,000. What do you want to do? How do you want to do it? Do you want to reverse? Do you just want to get out? These are all going to happen, and this is actually not even moving as fast as I've seen the NASDAQ move. These are what's going to come into your head, and this is what you're going to have to deal with. All right? You're like, okay, I still think it's going to go up. They're kind of pausing here. I'm going to buy another one. Now, see how fast that went, and I'm buying bid. So they're hitting bids here. But let's just wait, and let's just see. You know, when they're at a time of day where it's not too unusual for the buyers to come in, you know, hedge fund guys, oh, okay, now we're going down even more. Now I'm down 1,300. Uh-oh, what's going on? Now I'm to a level that really can produce a strong buy if it holds. That's right here at 968.75. So I'm going to try to buy, and if it gets there, I'll try to buy another one at 69.50. Now, if it gets down there, and because that is an area where it shouldn't. All right, so now we're a little bit more relaxed because we've seen it. No, now it's dropped back down. What are you going to do? How are you going to do it? These are the thoughts that can go through your mind. Do I want to get out of my short? Or my long? Should I now be short? But you know, you should have been short above. This is all the noise that's going to happen in your head. It's very difficult to trade and make good decisions when you're approaching it from a point, or your reference point is negative. So my overall point here is, hey, this trade's kind of like, well, if I don't keep building it, bringing my average cost down, I'm going to get killed. So what is the maximum that I'm willing to take? Me personally, it's already been surpassed. So, but maybe, you know, and let's put one more in. You're in trading and you have a $10,000 account. Look how much you're already down on 10,000. And this is your first day. And my points remain. It's like, these are important things that we need to do to keep ourselves in the market, keep ourselves focused. Now, if you're working a big account, you know, say you have a $50,000, $100,000 account, or even more, 2,000, I'll risk it because I think the buyers are going to come in, and when they do, they're going to take this thing all the way back up to here. That's where I want to put my trade. So I'm already going to be smart. I'm going to put my sell right there. So I'm set, but how much you want to risk? Right? My limit is I can always take 5 contracts because I don't have that much more in my account, et cetera, et cetera. So now I'm just going to sit here. If this is your trade, how do you feel? How do you want to feel? Right? So it's important to keep tabs on this, on your sensations, your emotions, and your thoughts all throughout your trading day. You start with it, you take a look at it, and you decide, do I continue to trade? Do I stop? Do I limit this or do I change? Change doesn't always have to be as difficult as we make it. The market has had to change for a myriad of reasons. It's now totally electronic. We're getting notice of what's happening in the market, like a big seller walks in, a big buyer walks in, all at the same time, because the only advance notice is maybe it's a large trading desk and they've told their traders. I don't know. But here we are still in this trade, wondering what to do. We see that it goes up. We're a little bit more relaxed. We're okay. We're still okay. But you noticed how quickly it moved down and we were back down. That's my point that I want to continue to show. Because we're letting it go. We're letting it go. Now, you're involved in this, and maybe you should have gotten out up here and reversed to short, and then you made your money back. But a lot of people don't. Why? Fear. Fear is an emotion. So we're going to try to keep a track of that. Fear sometimes can produce anger. Anger is going to make us add to it. Anger is going to either make us get out and revenge trade, or I'll show you market, and perhaps it's going to work, or perhaps it doesn't. So again, sensations, emotions, and thoughts. If your sensation is that you're nervous, now you're getting anxiety, you see it's, okay, I'm getting a little bit more comfortable. I've made half that money back that I just could have given up. Let's see what happens. Pay attention to what your emotions and your thoughts and your sensations are, because during each trade, you may need to do it. How do you prevent this? How do you keep control of this? Well, my suggestion is that you have your plan. You have a trading plan. You know what you're going to do, how you're going to do it. You know before you press that button how much you're going to risk. And when you reach that level, you have to be mechanical and like, I'm closing the trade, because it gives you the opportunity to stand back and to react differently. Now, I had a big enough account, so I'm still here. But now here's the other thing. I'm like, okay, I'm going to get out. Now I made all my money back. But how many times do people get out early? Because they took so much pain, As soon as it became profitable, boom, you're out. Phew. And what a relief that was. Now, possibly what would have been better is to be more relaxed what you were doing and still made the money. By having a plan, by having limitations around each and every trade that you make, by having a good risk management profile in place. So there was no doubt, as I said, I felt very strongly that the market was going to rally all the way back. And now having said that, let me just kind of put the chart back, it likely from here is going to rally back to where I thought I would get out before, right there. Now, do we have the patience to wait? Some of us do, many of us don't. And if you're the type of person that's like, I was down $2,000 down here, and now I would have been up a lot more than what I made, I'd double. So I'd have been up $1,800 to $2,000. That's down $2,000, now I'm up $2,000. Are you strong enough to hold? Does your stomach let you hold? Does your psyche let you hold? When you have your, I hate to use the word routine, but when you have your routine in place, when you have your guidelines and your rules in place that are built for you, not for somebody else, they're yours. because you're the only one that has to deal with you as you trade. How strong is your resolve? How strong is your analysis? If you're wedging on it, if you're basing it on somebody else's knowledge, so you're just going to attempt to do it, that can be dangerous. Now, what I do as well, for me, as I told you, now we're back up at that point of control, so the market should waffle. You see, it's not really kind of moving too far much further ahead of it. It may, but it's at a point where it's like everybody gets to look and go, okay, we're back at a point of control, so we're okay about trading here. How do we want to do it? Are we going to move above the point of control and go up to this next line, which is the VWAP? Or do we kind of go up to a moving average? Or do we go up to the top of the developing area high? Now that's just developing because I'm working on a 5-minute chart. That could change if I pull my chart open and give even more time to it. It's going to change all the numbers. We certainly have been much higher today. We've been, earlier, we were a lot higher. But right now, I'm kind of looking at, right now, here's a focus on stochastic, which also tells us, how much momentum has the market got? It's got plenty for this little tiny move, but it's kind of got some room, so it can continue to go. But here we are starting to get towards the top. We're getting a little bit away from that point of control. We're heading up towards that VWAP. Everybody gets to take another look. So you want to be clear. You want to be not sitting going like, come on, come on, come on, come on, come on, trade. You can do it. Come on. Cheerleading a trade isn't going to help, isn't going to make it go any better, isn't going to do anything. Being informed, being educated in terms of what are the possibilities? Where do I sit? If you're a follower of Elliott wave, what is the market doing? Right now, that was up, a down. It should go up, and if anything, it should equal this. So if I look at that, I got 31 there, 1946. So you've got 31 plus quite a bit. You've got 60 points. Add that to that, and you're up where you are. 60 NASDAQ dollars, by the way, at $20. You can figure it out. That's a lot of money. It doesn't look like it is here, but the reality is that it is good money. Now, again, if you're an options trader, it's a different set of, it's the same emotions. Let me take that back. It's the same emotions that are going to come in and affect you, but maybe not as quickly. Unless you're trading an extremely volatile stock like Amazon or Apple or Tesla, or there's many that can move through strikes like there's no tomorrow. So what you thought was a position could turn into a disaster real quickly. So those same emotions are going to come in. So again, I want to be able to tell you guys that taking a look before you step into the market so that you're aware of what's going on with you, what's going on inside of you. Now, I will be honest with you, on the days that I don't, I end up knocking myself off kilter because I didn't pay attention that I had this little chip on my shoulder. I didn't pay attention that, I did have that headache this morning, but I decided to trade anyway. I really didn't sleep well and I didn't want to get up and I'm a little bit crabby. Boom. That is also going to have an effect on how you trade. So I'm not saying that we've always got to be this cheerful, but we need to be aware of what is going on with us. The market's going to be the market. How we interact with it is only going to affect us as individuals that are participating. The market doesn't care. All right? The market truly is not even bullish or bearish. It just reacts. It just does what the order flow suggests. And as a day trader, all I'm attempting to do is to get in and get out and make my money that I'm determining, whatever amount that is, each and every day. Do I have a per trade amount? Yes. But if I'm really needing to scalp around, you're going to make adjustments. These are things that you're going to learn. These are the tools that you're going to pick up. If you're going to trade a market, you want to find out what makes that market tick. What do I need to pay attention to? Well, we need to take a look at volatility. Volatility in a market is going to tell you how quick. The NASDAQ is very fast. The NASDAQ can flip and fly. Here, let me just tell you, we were sitting here talking. This thing was down here at 965. So that's, let's just use 65 round. That's 35 plus 35, that's $70, 70 NASDAQ dollars at $20 per point. That's how much just moved in the 5 minutes that we were talking. And it's still going. Now it's gone above VWAP. So you sit here and you think, okay. So do you see how you got that trade and you had to hold it to make your money? Could you have held it? Or should you have gotten out up here, gone short, and then gone long? Mindset is going to help you. If I'm clear, and I'm not necessarily going to focus on my P&L, I'm going to focus on the market and the move. Is this continuing to tell me? Let me take a few things off so we can see this. Is this market continuing to tell you, like, if we didn't have this, if we only had that, and we decided that it should go up, and we got down to here and thought, okay, that should be enough. So we buy it, go up, we're fine, starts to drop back down again. Where do we need to go out? And then make another choice. Do I need to be short? Well, then maybe you did short it, goes down, you make some money, and now you start to see that the buyers are moving back in, maybe via a footprint chart, and maybe just through a delta chart, like down here, delta's changing, and you start to see them walk back in. Okay, I cover calmly. You get long calmly. Because in actuality, nothing told you that the market's still not going to go up. If you're an Elliott wave trader, that would change if it came down and broke that low. So that's how far it could go down before your thought about the market going up is off. It's wrong. It would have to break that low. Then you had an idea that's going to go to this low. But say it didn't. But in the meantime, you saw us. We put the trade on. We got up to 5 contracts. We're down $2,000. Can you handle it? Is your account big enough? Do you need to add more if it is? You need to have a clearer mind, not one that's going to be filled with fear, filled with the unknown, filled with doubt, filled with different emotional things that are going to come flying into your head depending on who you are personally, how prepared you were to come in and trade, how prepared you were to come in and day trade the market. What is your knowledge of just the market? Again, going back to the previous presenter, and somebody's asking, is your course good for people who are barely understanding how to read the screen? Well, yeah. If they're teaching beginners, absolutely. When I have had trade rooms and other things, I've made it very specific. People said, well, I'm an absolute beginner. I don't even really know how to read the screen. And then I say, that's not a problem, but you might want to first get together with me during some coaching sessions so that I can teach you. Once you're teaching, you're gonna understand this. You're gonna understand these numbers. You're gonna understand what those levels mean. You're gonna understand what happens when they're broken in either direction, and that markets ebb and flow. If it gets up and kicks this target right here, the top of the point of control, and turns lower, that's just a normal progression. In other words, it ebbed and now it's flowing. It ebbed and now it's flowing. What are the possibilities? Well, we've already figured them out. The first one was right here. First one was point of control. Second one was VWAP. Third is the developing high, value high. value area high. Now that's on a 5-minute chart. So if I'm pulling this chart up, let me just go up. Let's go to a 30-minute chart. That's your time frame. Look what happens. It all kind of changes. We've got the lower ones. This is going to be a volume counter. We've got the lower ones here, but we're looking at, if we had more time, it could change. You can see these are pivot points, but that's on a 30-minute basis. This is resistance on a 30-minute basis, right? Yesterday, the market was up here. So you always, your calculations are always going to take that into account. So we're watching all of this. Now, I couldn't possibly trade on a 30-minute chart. I mean, I look at a 30-minute chart, but I'm just going to tell you my morning routine real quickly as we're wrapping up here. I look at what happened overnight. So I'm going to start on a daily chart. So I look at a daily chart and I see what action, where did it go in my bigger picture. So that's the biggest picture I'm going to look at for day trading. I'm looking at my daily. What are the limitations? Well, on a daily basis, you're going to find resistance here. You're going to find support here, et cetera, et cetera. And then I can run some Fibonacci's because, again, two big things in my book, folks: Elliott wave principle, Fibonacci sequences, the numbers. They work. They're very handy to have, and it really does help you put limitations on your trading. It helps you keep things in line, and particularly when we're into areas that the market's never gone, like new lows or new highs, Fibonacci is going to help you out to pick targets and what the potential for continuation is. I'm going to kind of just take a breath because I end up talking a lot, and ask if anybody has any questions I can add. I will be more than happy to answer any questions that people might have. I kind of like this. I'm hesitating because I think if the market should have gone down, it should have gone faster. But we're really into the last 14 minutes of the trade day. And I got to tell you, there are particular times of the day where hedge fund managers or portfolio managers come in to do their business. Now, the way a lot of that is set up, they have specific times where they can come in and do redemptions or the new money coming in. New money, they're buyers. Redemptions, they're going to sell. Because it's depending on what their fund members are doing. Either they've got a bunch of new money to put in, or they need to figure out the redemptions, and they've got to pay out that money, so they got to sell it. There's one that comes in at 350, so in 3 minutes. That is notoriously large usually. Now, these are things you're going to learn if you come in and you're trading futures. You're going to learn that there are specific times of the day when buy programs hit the markets. And they're more than one. So it's going to be a period of buying. You can buy software that others have developed, which are going to give you that window of time to when these things happen. I think when you're dealing and you have a footprint chart and you've got points of control and value area highs and low, you're going to get a much clearer idea of when they're moving in and then what side they're coming in on. And then you can then figure they should take it to here, or it's going to go to here. There's other people that they've spent enough time and they're studying footprint charts. They're studying value area high, value area low. They're studying midpoints and levels up and down. And so they have figured that if it hits this level, which should create a pause, and it doesn't move past it, it's usually going to go lower and it'll drop down to the target below. If they break that, then it's more than likely going to go to the target above. And these are things that are based on the charting software, David, just one second. And these are based on levels that are Fibonacci relationships. Everything in our entire universe, folks, is built around Fibonacci relationships. The way we look, it's a Fibonacci relationship. Your eyes, the number of fingers on a hand, and then the joints in a finger, 3 and 5 and 2. These are all Fibonacci numbers. It's the law of nature. We can't escape it. They do work. I really highly recommend picking up Fibonacci and learning how it's applied. There's very basic relationships in terms of a corrective wave to an impulse wave. For example, this was a trend. It's in the trend. It's 5. It's 5 waves. 1, 2, 3, 4, 5. And then what did it do? A, B, C. Did 3 waves. That was a 5 wave. This was 3 waves. Now it's working on 5. I suspect it's going to get above that level. 59 could do it real quick. That finishes the 5, and we'll see. Now here comes the guy that he wasn't so big today, but he was in the S&P. Just drove it up $3. Okay, so that now this guy that comes in at the 350, he's done. What would I suspect now? Well, unless we get more buyers, this thing's going to head down, and they should likely sell it into the close. That's the way the market started. David is asking me on what my charting software is. This is Ninjatrader. And this point of control and all these different things, that is also Ninjatrader. You have to have a lifetime license to receive them, but they're very, very useful. And you can also build an additional chart, which is actually going to show you the footprint. So it looks a little bit different, and I can't pull it up that quickly. But then you're going to be able to see aggressive buying, aggressive selling, how, you know, you're going to give yourself a lot more knowledge, or just directional flow that's going to help you to decide. It's going to, when a market is ebbing and flowing, like I said before, it gets to a target, and could it go beyond the target? Absolutely. So, but you have another Fibonacci number above it that's going to tell you, it's like, if it breaks here, that's where it should go. Is it a guarantee? No, but that's where it should go. When I'm doing a lot of other things, like in the Fibonacci here, these are just very simple. I put in my own extensions and what I want. So that's why that might be a little bit different. And again, we're going to put that on. So there, okay, now I look there, and I was wanting to know what's the limitations. Well, it got up to the 1, and now it's kind of sitting around it. This is a very common 76.4% of this move is where it got thus far. That's pretty common, but that would make it perfect. In that case, this leg equals this leg in length. And that's also very common, and particularly in a corrective phase. So maybe the market's going to close up here at 78-ish. Would not be a big surprise. I am actually very surprised at that there's not a lot more activity, because we're now moving into the close, and I was kind of hoping we'd have a more typical close so you can see how quickly this thing moves around. And if you're trading, how you got to keep a clear head. Right now, I was like, yeah, well, I think it goes up so you can buy it. Well, it's not really moving all that fast, but it can. So again, let me just wrap it up by saying, first of all, thank you. Thank you for spending the time with me this past hour. I hope I've added some words of knowledge for you on ways to, Greg, I can tell you, no, those are going to be Eastern. That are on the list, those are Eastern. Eastern time. I'm Pacific time, but those are Eastern. My here are Eastern time. No problem. Keeping tabs on your emotional self, your sensational self, and sensations, more than sensational, because we're all sensational, quite frankly. But in any case, your sensations and your thoughts. And this is something that Doc Severinsen said, and I could not agree more. So I'm going to finish up with this. The words we use are of vital importance because they are powerful. They go internally into our mind and into our system. If we're using words like I can't, I won't, I shouldn't, that permanently gets into your brain and it'll sabotage you. If indeed you end up telling yourself after a trade, you're an idiot, you don't know what you're doing, you stupid fool, or you stupid market, you guys had no clue, what are you going up for, what are you going down for, etc., etc. This is going to knock you off your path. It's going to sabotage your however long it's going to envelop you. But these are things that are conquerable. You don't have to go there. So as Doc said, you learn not to say them, and it takes time. You're welcome, Peter. Thank you. It takes time to change a habit. And a lot of our habits could be good, but a lot of our habits are bad. And my last word's going to be, I have made a decision that what I choose to do now, I love trading, but I like educating. So instead of having a trade room, I'm now going to be presenting myself as a coach. And so I'm looking to develop coaching people that want to come in, that want to learn some trading skills, that want to learn how do you put a plan. Thank you very much, Barbara. How you put together a trade plan, how do you use it, and what do you got to do to be successful? Because we all got a lot of time on our hands right now. Pandemic isn't going away. We all pray that it does. But if we need to and desire to become independent and professional traders, it's all really possible. But be prepared. Give yourself a really big boost that you're going to be successful by doing it right. You can't just buy some software and turn it on and go like, okay, work. I wish it was that easy, but unfortunately it's not. Again, thank you very much for joining me today. I'm glad that the ones who did received some information. I really appreciate that. Thank you, David. I really like showing the in the moment approach because that's real versus here's my chart. If I did this, you see what happens. It doesn't work that way. So I like using that. So thank you. I'm glad that that worked. And I'm going to turn it back over to David.